The Clarity Act was supposed to send crypto flying. So why is everything crashing? That is the question I'm seeing people asking on social media right now. What's going on, everybody? It's Matty here, and today we need to talk about something that's completely confused the crypto market. Because on paper, this should have been one of the most bullish weeks crypto has had in a very, very long time. The Clarity Act is moving forward. The regulations are becoming clearer. Institutions are watching closely. XRP holders finally feel like the tide could be turning, and yet Bitcoin dropped, Ethereum dropped, XRP dropped. The entire market got smashed in some people's eyes. So today, I want to break down why is crypto crashing despite bullish news, why this happens all the time in financial markets, why the macro environment is still controlling everything, why leverage is making these moves even more violent, and why this could actually be setting up something much bigger later on in the year. Because I genuinely think that a lot of people are misunderstanding what's happening right now.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Now, one of the biggest mistakes retail investors make is believing markets move logically. Most people think good news equals price goes up, bad news equals price goes down. But if you've been in crypto long enough, you realize the market often does the exact opposite of what everybody expects. And honestly, that's because markets are designed to transfer money from the impatient to the patient. The market wants to shake people out emotionally. It wants people scared at the bottom, euphoric at the top, chasing green candles and panic selling the red candles. And crypto is the king of emotional manipulation. That's why sometimes the most bullish developments happen right before a dump, because the market moves ahead of events, not after them. But I can hear the comments already. Matty, but wasn't the Clarity Act bullish? Yes, it's massively bullish long term. And that's the important distinction here. Long term versus short term. A lot of retail investors think markets work like this. Good news equals price goes up instantly. But in reality, markets are psychological warfare. Very often the market moves before the news and then reverses after the news. And that's exactly what we may be seeing right now. Because if you look at crypto over the last few weeks, traders were already positioning themselves ahead of the legislation. People were buying the rumor. Then the moment the news starts becoming reality, the market starts taking profit. Classic, absolutely classic. Buy the rumor, sell the news. This is one of the oldest sayings in trading. Buy the rumor, sell the news, and crypto loves to do this. You saw it with Bitcoin ETFs. You saw it with Ethereum ETF speculation. You saw it during the previous XRP court developments. The market gets excited before the event, not necessarily after it. Because by the time average retail investors hear the bullish news, the smart money has often already positioned itself. And then what happens? Leverage gets wiped out, late longs get liquidated, retail panics, fear spreads, and the market moves lower temporarily. That doesn't necessarily mean the bullish narrative is broken. It just means the market is flushing people out. And honestly, one of the best examples of this was the Bitcoin ETF approval. Remember what everybody thought was going to happen. People thought the second the ETFs get approved, Bitcoin is going to explode instantly. But what actually happened? The market pumped heavily before approval, then corrected afterwards. But why? Because big players positioned early. By the time retail investors finally felt safe buying, the market makers had already made huge profits. This is why understanding market psychology matters so much in crypto. The charts are not just numbers. They represent fear, greed, panic, euphoria, liquidity, and human emotion. That's why crypto can feel irrational sometimes, because emotions are irrational. And remember, macro is still king. Now, this is a really important bit. Crypto right now is still heavily connected to the wider macro economy. And this week, there's been several major fears hitting financial markets all at once. Inflation concerns, bond yields rising, fears that interest rates may stay higher for longer, and geopolitical tensions, and overall, a risk-off sentiment. When markets become fearful, risk assets get hit first, and crypto is considered probably the riskiest asset of all the risk assets. So even though crypto got bullish regulatory news, macro fear overpowered it. This is why sometimes you can get bullish fundamentals, bullish adoption, bullish legislation, while prices still fall anyway. Because liquidity matters more in the short term. Now let's simplify this for the beginners. When interest rates stay high, money becomes expensive, borrowing becomes harder, risk taking reduces, and investors become more cautious. And when investors get cautious, they move away from high risk assets. That includes small tech stocks, speculative investments, and crypto. So even though crypto believers focus heavily on legislation and adoption, big money still watches the Federal Reserve very, very closely. If the market believes rates stay high longer than expected, that can pressure crypto short term. This is why sometimes crypto reacts more to Jerome Powell than crypto news itself. However, Jerome Powell is out, the new guy is in, so let's see how this evolves over the next year. And a lot of new investors don't fully understand how connected these worlds are. Now, XRP is reacting slightly differently compared to Bitcoin, and that's because XRP is uniquely tied to regulation. Bitcoin is already largely accepted as a commodity, but XRP, its entire future narrative is heavily connected to legal clarity, regulation, institution adoption, and cross-border finance. So every single regulatory development creates massive emotional swings in the XRP community. One headline sends people euphoric, the next sends people into panic. But if you zoom out, the overall direction of regulation has actually improved dramatically compared to where we were just a few years ago. That's the key thing people need to understand. Years ago, the conversation around XRP was, will it survive? Now the conversation is, what happens if regulatory clarity unlocks institutional adoption? That's a massive shift. Now, this next bit is fascinating to me because inside the crypto wolfpack, Dean has been talking for months about what he calls the 4th of July theory. And honestly, the more time goes on, the more interesting it becomes. His theory is basically this. What if the US government wants to time major crypto legislation and announcements around America's 250th anniversary celebrations? Because politically, that would be an unbelievable moment. Just imagine America presenting itself as the global leader in digital assets, pro-innovation, pro-technology, pro-financial evolution, all during one of the biggest patriotic moments in modern US history. Now, am I saying that's guaranteed? No, absolutely not. But could politicians absolutely want a massive symbolic victory tied to financial innovation? 100% they would. Now, if the market believes bigger announcements could be still coming, then maybe this current sell-off isn't the end of the story at all. Maybe it's just the market resetting before the next phase. Now, another reason the market moves so violently is leverage. Now, crypto traders are insanely over leveraged right now. People trading at 20x, 50x, 100x, 125x, 200x. And when Bitcoin loses important levels, liquidation cascades begin. One forced sell leads to another, which triggers another, which triggers another. And suddenly you get massive red candles that look terrifying. But sometimes those moves are less about fundamentals and more about market mechanics. This is why experienced traders often stay emotionally calmer during volatility, because they understand that liquidations are a part of crypto. Now, here's something interesting that happens during crashes. Weak hands panic. Strong hands start to observe. The average person sees red candles and thinks it's probably over, while experienced investors will look at this and then think, this is interesting. Where is liquidity moving next? Now, that doesn't mean every dip should automatically be bought. Of course not. But history has shown us that crypto markets often create maximum fear before major recoveries. And psychologically, most people cannot handle that volatility. That's why patience becomes such an advantage in crypto, because emotionally surviving the market is often harder than technically understanding it. And this is why most people lose money in crypto. And honestly, this is why so many people struggle in crypto, because people buy when it feels safe and they sell when they feel scared, which is usually the exact opposite of what successful investors do. The hardest thing in investing is emotional control, not chart patterns, not indicators, not fancy technical analysis, emotional control, because the market constantly tests your conviction, especially during moments like this. So is this bullish or bearish? And honestly, I think this is one of those moments where short-term fear and long-term optimism are colliding. Short-term, we're definitely going to be seeing volatility, uncertainty, fear, and liquidity problems. And long-term, we're seeing improving regulation, institutional interest, ETF growth, government involvement, and clearer legal frameworks. Those are not bearish developments. In fact, those are some of the most bullish structural developments crypto has ever had. The problem is, markets rarely move in straight lines. And crypto especially loves hurting the maximum amount of people possible before major moves happen. So if you're sitting there wondering, why is crypto crashing when the news is so bullish? The answer is this: because markets are emotional, leveraged, liquidity driven, and heavily influenced by macro conditions. Sometimes the news is bullish, but the timing isn't. And sometimes the market needs to shake people out before the real move begins. Now, whether this clarity act momentum eventually becomes a catalyst for a much larger crypto rally later this year, that remains to be seen. But one thing is absolutely certain to me. Crypto regulation in America is moving further forward than it has in years. And to me, that matters. And it matters a lot. Because for the first time in a long time, it feels like crypto is slowly moving from the outside of the financial system towards becoming part of the financial system itself. And if that trend continues, the next few years in crypto could be absolutely fascinating. And guys, before we finish this video, I also want to make a quick mention about the Crypto Wolfpack. This is our community of like-minded crypto people from all around the world. And honestly, one of the things I realized years ago is that crypto can be an incredibly lonely space. Unless you're lucky enough to have your best friend into crypto, most people around you simply don't understand it. They don't understand the volatility, the obsession, the late night researching, the excitement, the fear, and the opportunities. And that's exactly why we built the Crypto Wolfpack. We've now officially celebrated our first year anniversary, which has been absolutely incredible. And in that time, we've had over 2,500 people go through our products and ecosystem, including free crypto courses, trading view indicators, trade automations, live streams, educational content, and most importantly, the crypto community itself. Because at the end of the day, crypto is so much easier when you've got people around you who genuinely understand the journey. So to celebrate our 1-year birthday, we've launched a huge offer for new members. You can now get 50% off your first month inside the community. Just head over to cryptowolfpack.co.uk and use the promo code HAPPYBIRTHDAY. All capitals, no spaces. Use that at checkout to unlock the discount. And honestly, guys, you do not have to do crypto alone. Come and join the pack. And before we finish, guys, don't forget the UK Crypto Podcast is out every single Friday at 7 p.m. UK time. It's now on YouTube, Spotify, and TikTok. Me and Paula Talks Crypto sit down every single week with some incredible guests from across the crypto industry, from developers and CEOs to traders, influencers, and major crypto personalities. I'm going to link the full playlist at the end of this video so you can dive straight in. It'll be somewhere above my head. And if you've enjoyed today's video, please smash that like button, subscribe to the channel, and drop me a comment if you're still bullish on crypto long term. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.